Okay, welcome back to CD number 2. This is why property is the number one investment by far. Now, there are 6 reasons which I've isolated why I believe property is the best. I've invested in other things, I've done other things to make money, but I always come back to property, and that's what I've made my career out of. So the 6 things that I've isolated is: number 1, the income is recurring; number 2, the income is inflation proof; number 3, it's easily understood; number 4, the income is recession proof; number 5, and the most important one I think, is the investment is geared; and number 6 is demand exceeds supply. So starting with number 1, the income is recurring. Now, I started in business at age 5. I was a little entrepreneur at heart, and I used to buy and sell different items and sell to kids and sell to other kids, because I understood what kids wanted. So I used to buy marbles, sell them. I used to buy the bag of marbles, split the really nice looking marbles and sell them on to other kids because they liked all the clear marbles. I would buy and swap Star Wars cards. I would isolate the ones that were rare and then able to sell them. Computer games, the good games. And so basically I would be a trader, and for some reason, I think this was before I even invested in property, I thought, well, what I need to do is I need to find something that I have a ready supply of customers. And the only way you can do that, knowing that people are going to come time and time again, is property. Think about it as a long row of customers, all in the future, ready to pay you every beginning of the month or every week, whatever it is. You haven't got to find a product to sell and then sell it. You haven't got to advertise for this regular income. Once someone moves in there, that money keeps on coming, and it's just a matter of time before you find a good tenant. I mean, I've got properties that I've bought 5 years ago, and I may have advertised for tenants, and it may have taken me 2 or 3 tenants to move in and move out before you get a tenant that will just stay there, and they'll stay there and for life. I mean, if you think about your own personal circumstances, are you someone that's moved about from place to place, or is it that you've eventually found a home that you want to live in and you'll just live there? Now, you may own your home, but I'm thinking, there are people that will never ever own their home, but they still want to be part of a community and they want to stay where they are. And so the one I'm thinking of is a lady called Gail, and she's a really lovely lady, and she lives there, and the money keeps on coming, the housing benefit pays, and I know I've not got to look for a customer on that, so that's recurring, so it keeps on coming. So always remember that. Number 2, the income is inflation proof. Now, that means that in next year and a year after and future years, the income goes up with inflation. Now, the reason that is because rent is set pretty much as a function of wages. Now, that's just basic economics. Now, why that is, I don't know, and whether that will ever change, I don't know either. But history has proven itself that rent is roughly about 1/3 of people's take-home pay. Now, that's why they set the mortgages at 4 times salary, and roughly it works out that people are willing to pay 1/3 of their salary towards living costs, and as people's salary rise, people don't mind paying that bit more to live in a better area. So you can roughly look at, as long as wages go up, which wages go up with normal retail price indexes, and we want to be the government wants to stick in with this 2% inflation target. So what you'll get is that rent will rise with inflation, and that makes rent a very powerful income, because that if you have bought a property that's going to return £500 a month today, that property is going to return you £500 a month in 25 years, because nothing's going to change. In real terms, you will get £500 a month. So you compare that to investing in putting your money in the bank. let's say, right? You put your money in the bank and say you put £50,000 or something, and that returns you £500 a month. I haven't done the figures, but let's just say it's £500 a month. You know, if interest rates stay the same, if we can assume that, because interest rates will fluctuate, but will probably hover around a mean amount. You know that in year 1 you'll receive 500, in year 2 you'll receive 500, in year 3 you'll receive 500. So, but as prices rise, you're getting less and less money. So, and in 25 years' time, now if you compared that with property, the one in the bank you'll just be receiving 500, but in year 25 on the property that you'd have receiving 500 25 years ago, you'll probably be receiving something like £2,000 to £2,500 in rent. And that is why cash is a very, very poor investment, and why property is a very, very good investment. Now, you could compare that to the stock market. Now, dividends will be a function of inflation, so that the returns would be inflation proof, but the risk associated with stock investments is very high. Now, some people may disagree with that, but I will tell you now, the stocks and shares, and investing in companies with no assets, just the strong cash flows, I think is financial suicide, because you could get 15-20 years of good positive cash flow, positive dividends, but then you have the situation where as soon as the market, the business changes, or the business doesn't keep up with the business model, and that could be a simple case of a CEO changing, a CEO retiring, and no longer the founder is running the corporation. You can see a dramatic turn in cash flow. So that's pretty much saying that rent is inflation proof. Now, number 3, it's easily understood. Now, look, we all grew up in a property. Look, we understand what it is to live in a property. So to make this point, you've got to compare it with other investments. So if, for example, I mentioned the stock investments before, if you was investing in the stock market, now Vodafone, for example, now that's quite a good, strong company, got value. Now, do you understand mobile phone technology? Do you understand the threats that business is operating in? Do you understand GSM, 3G, 4G? Do you understand? Now, maybe you do. Let's say you do. Now, what about in the future? Let's say you do. What about keeping your eye on the ball? Are you aware of Vodafone's key competitors, ones that are taking its market share, and actually monitoring it? Because let me tell you, these investment banks, they do monitor it. So even if you've got an interest level in say a particular industry, you're never going to be able to keep up with these stock guys, these investment houses, hedge funds. The reason is because these hedge funds and these stock investments, they play with large amounts of money. We're talking billions, pounds and dollars. So they can afford to employ an analyst on $100,000 a year, and a team of analysts, because a slight movement in percentages differences on their investment has a massive effect. So it's in their interest. But if you're just playing the stock market yourself, it's very difficult, because you've only got yourself. Now, you could start investing in hedge funds themselves, but you need a minimum entry of 100k. But again, these hedge funds have lost a lot of money, because essentially these businesses were overvalued, and the reason why they were overvalued is because no one really understood what the values were. Whereas a property, you can easily value a property, because you'd look at the value of it relative to the rental values that you can achieve out there. You can value it as relative to the values of salaries. So what I like about property is it's very easily understood. I don't know how houses are built, I'll be honest with you, and I'm never ever painted a wall in my life. But I know that if a builder tells me, look, your house needs repairing and it's going to cost you £6,000, and I can look at the property and think to myself, well, there ain't that much wrong with it, then it's very difficult for someone to pull the wool over your eyes. Where they can do is things like electrics and maybe gas, but even still you can get second, third and fourth opinions, and often that's what I do. Okay, recession proof. Now, property is one of those things, it's a core basic need. You've got the 3 basic needs: food, warmth and shelter. Now, Tesco's make their money because everybody needs food. The utility companies, they're always going to make their money. People will always need to keep warm. And the third thing is people are always going to need somewhere to live. Now, if you can easily get into the food market or the utilities market, then good luck to you. These are big companies. This is high barriers to entry to get involved in any of those, and you could invest in them in the stock market, but again, as point before, you have to investing in individual stocks and shares is very risky. So investing in property, now that there are low barriers to entry. You pretty much, you don't need any money, you don't need any particular skill or training. In Scotland you need a licence, but they pretty much give a licence to anyone as long as you're a fit and proper person, and that means you're not a criminal. So pretty much the barriers to entry is, well, zero. You buy as long as you can get finance. That's the only barrier, which buy-to-let mortgages have suffered a little bit, but there'll always be finance for lending for investing in properties, and there are adverse lenders now. They're coming back, and there are no money down schemes, so you can invest in property with pretty much nothing as long as you can take the risk. So when you've got barriers of entry to nothing, you can see how appealing property is, because it's never going to go out of fashion. And also, if you think about it now, we're currently, I'm talking in 2009, we're currently going through a recession. Now, you've got people going out of business and things like that, whereas in my business, if my tenant loses their job, they'll go and claim off the government and they'll get housing benefit. Now, the rent that I receive throughout this period of recession has not seen a drop. Now, that's nice to be in, because you've got interest rates that have dropped in a recession, so my costs associated with my portfolio has gone right down, but the income has stayed the same, and that's during a recession, and that's because no matter what, people always need somewhere to live. Now, let's say Great Britain itself got into real trouble and it could not provide, it went bankrupt and it could not provide housing for its residents, then we would be in a lot of trouble, and I don't think that situation's going to occur. So homelessness is not a problem in the UK, right? We'll always be looked after. If I was to suddenly lose all my business and go bankrupt, I know that I could walk into Social Security, get a housing benefit, get council tax, and I would be renting off another landlord, or if not, being in a council flat. So there will be income for homeowners, people that own investment properties, because this government doesn't allow people to live on the streets. Okay, the fifth one is, and the most important one I would say, is that you can gear to make the investment. That means to borrow. You can borrow to make the investment, and as I said earlier, you can do it no money down. Now, compare that to the stock market. If you went to the bank manager and said, look, can I borrow £100,000 to invest in the stock market? I know what he's going to say, and I think you do as well. He's going to tell you to to get lost, and the reason is he knows, and I know, it's too risky. No one's going to provide you finance to invest in the stock market. Now, there are some banks that do lend companies that invest in the stock market, called hedge funds or split capital investment trusts or whatever complex names they've got, and they do lend, but they've got massively long track records, and even now, I reckon, even though with their track records now, I don't think they'll be able to get finance because of what's happened. But you can, if those big corporations got a history of lending money to make stock investments, they will lend to those sort of organisations. But as a man on the street, you're not going to get any money to invest in the stock market, so you have to use all your funds yourself. Now, if you've got 10 grand to invest in the stock market, and let's just say you know exactly what you're doing, and you do really phenomenally well and outperform any kind of investment house, and you get a 25% return, right, in 1 year, your 10k will be worth 12,500. Now, let's just say you use that same 10k in the property market. Now, excluding no money down, let's say we're not doing it no money down. You buy a property for, say, 40,000, right, and you put 10k in, right, that's 25% deposit. And let's say the property market rises by, let's say, the same 25%. So your £40,000 property rises to 50,000, right? 25% growth, 10k. So now your 10k has made 10k, right? Even though the market's only risen the same as the stock market, 25%. So effectively, your 10k has gone 10k. If you invested in the stock market, your 10k has gone to 2,500. So in the property market, you can see you've doubled your money. It's a 100% return. Whereas on the stock market, you've made a 25% return. Now, I don't know about you, but a 100% return is a lot more well received by my bank than a 25% return. And that's assuming that you've outperformed any kind of hedge fund or investment house. because 25% return on the stock market is pretty damn good. So with gearing, and that's excluding no money down. Now, if you utilise no money down, if you put no money in and you make 10 grand, that's called infinity. You have made infinite returns, and that's what's really exciting. And I've looked at my own personal situation. I started with 500 quid back in 1996, and we'll say my portfolio is worth 15 million pounds. Now, that is a phenomenal return. I don't know how many %1,000,000 return that is over, but if you annualised it, I'm probably making 1,000,000% return on my money. Now, it sounds a ridiculous amount, but that is exactly what you do with no money down deals. You are making infinite returns. Now, you put some money in, like you have to put some money in, it's going to cover some fees, etc., voids. But overall, in the last 10 years, I've gone from nothing to 15 million. And if I compared that to staying into my job, I could have saved probably maximum £10,000 a year of my salary over the next 10 years. So I could have invested in total in 10 years £100,000. Now let's say I really invested that wisely and I got a 500% return off that over 10 years. My 100,000 would now be worth £500,000. And some people, compared it to my colleagues, if after 10 years of working I had £500,000, that is not bad. But if you said that to any property investor and you said, look, I've invested £10,000 every year for the last 10 years, and all they've got is a £500,000 portfolio, it's not that impressive. So the returns you can make from gearing it just totally multiplies. It's like giving your returns a shot of steroids, because it just turbocharges your returns. And so any investment you decide to make sure it's geared. Yeah, that's how people get rich. The way you can gear is you borrow or you VC it, called venture capital. If you can get someone else to take the risk and they put the money in, you've geared your investment, right? But venture capital is quite hard to get, and the criteria to convince a VC to a venture capitalist to lend you money is way stricter than what a mortgage lender would do. I mean, all they need to do is make sure the property is suitable for mortgageable purposes, and you do that by just getting a survey. And so the finance is easy to get. Gearing up a property investment is the easiest. And I have this conversation with many people. Like, I say, look, try and find me an investment that you can gear quite highly, and you get someone else to pay the interest cost. That's quite difficult to do. The only other one I've ever thought of was vintage cars, because you have to make sure that the investment that you gear is not a depreciating asset. In other words, let's just say I was to set up a brand new car rental business. Now, I could get finance for it, I could rent the cars out, but the asset is diminishing in value. So, to me, that has no interest. But the only other one that has got any kind of similarity to property investment is a vintage car hire business, because the cars are not depreciating. You can get finance to buy these cars, and you can rent them out, and you could get the rentals to pay for the cost of the finance. But the only problem is I don't understand much about cars, and also I would be too terrified of giving someone a vintage car that I've spent 50 grand on with the bank's money to go out and take out for a day, and it might not come back. So yeah, you might get insurance, admittedly, but how long is your insurance company going to let you say that someone's nicked it each time? So it's just not my thing, but there are people that make it. But that's the closest I can get to property investment. Other than that, I don't know. And in fact, if you do find something that's similar, where you can gear an investment on an appreciating asset, not even a non-depreciating, an appreciating asset that you can get someone else to pay the finance on, then drop me a line. You can send it via email, ajay@ahuja.co.uk, because I'd love to know. The only other one that I've thought of, but it is a depreciating asset, was intellectual property. But intellectual property rights diminish. It's like a lease that you get on the rights of works, and so you just can't get it. And I don't think you can even get finance on it, but maybe you can. But anyway, and then the sixth and final one is demand exceeds supply. Currently in 2009 we've had house building decline. Right now, There's this government report, 2020 report, where they said they have to build 200,000 properties every year. They're not building that anymore. House builders have gone out of business. It's 60,000 properties, if you're lucky, being built every year. There's going to be a massive, massive housing shortage. Properties are going to be in short numbers, and there's going to be a massive demand for it because, well, the first thing is, population is rising in this country. Now, if I tell you some stats from 200 years ago, 1801, the population in the UK was 10 million. Population in 1901 is 37 million. Population in 2001 is 57 million. Now you can see the increase. It's grown by 20 million people every 100 years. Now that's not just because people say, no, it's immigration, blah, blah, blah. It's got nothing to do with that. The fact is, there are just more people on this planet. We are creating more people per person. Fact. And that's happened in the UK. In the UK, it's happening around the world. Population is just growing, and it's exaggerated by the fact that we've got immigration. We are a good country to live in. There are people that want to come here just to work, and that is causing population to even grow even at a faster rate. And also the way we live now, people are remaining single for longer, people are living longer, divorce is causing families to fragment, so the number of households required is growing. So that's why you're seeing these big houses turn into flats, because there's no need for these big houses anymore unless you're seriously rich, and then you'll have to start buying these flats and making them back into a house. But there's just demand for smaller households, and that is causing, that's why these big houses are getting converted into flats, because it just makes financial sense. You're buying a big house, you're splitting it into 12 flats, and you're getting probably 3 times more than you would if you bought it as a single dwelling. So there's just massive demand for property, and there's just not enough being built, and so that is what's causing house prices to rise. That's why they just can't fall to a certain level. There'll always be an excellent return to be had from property. If you think about property price as a function of the rent, so let's just say you've got £100,000 house, and you know that the rent is 10,000 a year. You know that, let's just say, say the rent's double because of lack of supply of housing. You know that house price isn't going to stay at 100 grand, because £20,000 rent is going to make that a 20% yield. Now, a 20% yield, I'll get into talking about defining yield, but a 20% yield is a very desired return. You can compare that return to interest rates, from the bank. If you're going to get 5% from the bank and you're going to get 20% from property, that's going to make that property very desirable. So that really would make property prices rise. So this unless there's a war, a big war, a famine or disease in this country where half the population gets wiped out, then that would have an effect on values of properties, because there just simply won't be the demand. But I don't know, if you're going to enter a business with the thought of these sort of catastrophic things that happen, then you're not going to get in business. Stay out of business. If you're that risk averse that you're going to think that these sort of things are going to happen, if you get into business, you're not going to be able to sleep at night. So barring all that, demand exceeds supply, and so those are the 6 reasons why property is one of the most awesomest investments. And like I say, if you can find a better one than that, where it's an appreciating asset, you can gear to make the investment, and you can get someone else to pay your financing costs, and all the other things I said, about being recurring, inflation proof, it's easily understood, it's recession proof, and the demand exceeding supply issues. If you can find me something better than that, then tell me, because I find this is one of the safest ways of getting rich. If I was to show you the targets that I've got, which I'll get into about telling people my targets, but the targets initially seem crazy, the large numbers you talk about, but it doesn't take long for whatever, when you get into these investments, it doesn't take long for the numbers to get big. If you're ever losing the way or wondering why you're in this property game and why you're thinking, is property right for you, think about what I've just said. Those are 6 solid reasons why property is just the number 1 investment so far.